Okay, Gwen, we'll be starting in just a second.
Okay.
I love working with gold mining companies. My very first investment when I was in middle school was homestake mining. My mom was
Amazing. Oh, I love that story. Oh,
yeah.
cool.
My
Well,
mom was a gold bug. We learned investing together. So
well, maybe I'll convince you on this gold mine.
you have me convinced. I went through the deck. I wish
Oh,
I could buy. Uh, So, well, very good. So we'll just go ahead and get started.
fantastic.
Good morning, everyone, and thank you for joining us. This is the June 2025 Sidoti Small Cap Conference. My name is Michael Matheson. I'm a senior equity analyst with the company. We'd like to encourage everyone to participate and ask questions. Q&A is one of the most valuable things, both for participants and for presenters. You'll see a little Q&A dialog box at the bottom of your Zoom screen. Just type your questions in there and we'll come to them toward the end. With that, let me introduce Gwen Preston, VP Communications for West Red Lake Gold. Gwen, please take it away.
Thank you so much, Michael, and thank you everyone who's online and participating. I've had a great day and a half, I guess, of meetings so far. This has been a fantastic event, so I really appreciate the opportunity to be part of it. I'm going to take you through the West Red Lake Gold Mines story. I'm going to try and do it in about 20 minutes so that there is time at the end for questions. Okay, so West Red Lake Gold, I'm actually going to pop back one slide here. West Red Lake Gold, I mean, we just turned on our gold mine, so it's a very exciting time to be speaking to you. We turned on the mine a few weeks ago. We did that after accomplishing 2 years worth of work that culminated in a few key milestones that we achieved about a month ago. And so I'll take you through the work that we did and what those milestones were and why they gave us the confidence that we're to turn this mine on. We've turned it on at about 60% of our targeted production rate. And so the second half of 2025 is about ramping up to that targeted rate. And then in 2026, hopefully pushing beyond that and adding some additional layers of value and opportunity, incorporating some additional opportunities into the Madsen Mine. So that's the thesis, is that the Madsen Mine with West Red Lake Gold is a rare thing. It's a new gold mine that is ramping up in this gold market where, the long, weak gold equity market that we've had for the last 10 years has stopped a lot of projects in their tracks. So there aren't a lot of projects entering production right now. And at West Red Lake Gold, the company was founded on the thesis that there was going to be a gold bull market. This was a vision from 2.5 years ago, and that the best way to give investors exposure to a rising gold market is with a company that has increasing gold production. So the new value that's created when you increase the amount of gold that a company is producing, that's what we believe is the best leverage opportunity for gold investors. So that's why the company was founded. And that we've just turned on our first mine is an important step in that process for us. So the mine that we turned on is called the Madsen Mine. It is in almost right in the middle of Canada on the western edge of the province of Ontario in an area called Red Lake. Red Lake is one of the probably top three most productive and famous gold districts in Canada. It's produced 30 million ounces of gold over the last 100 years, and Madsen was part of that history. It produced 2 million ounces of gold in the 40s, 50s, and 60s. Then the price of gold went down. The mine was largely dormant for many decades. The next part of the history that really matters happened from 2014 to 2022, and that's when a company called Pure Gold bought the mine. They did some very good work. This was a group that were good exploration and resource definition geologists, and so they did a good job of that. They drilled 180 kilometers of drill holes to define the deposit that we still work with today, which is 1.7 million indicated ounces. That's the second level of confidence in the 3 levels of resource confidence. So 1.7 million indicated ounces at an average grade of 7.4 grams per ton gold. So a high grade deposit in and around the historic mine. There's lots of room in and around the historic mine, rock that wasn't mined and mineralization that wasn't found at that time. So great deposit. They then built a mine on that deposit and put it into production. And unfortunately, that group hadn't done that before, and in particular, hadn't done it on this kind of mineralization. The gold in Red Lake is famous because it is so high grade. This high grade mineralization generally happens in narrow vein deposits that are not continuous. And so to manage that lack of continuity, the rule of thumb in Red Lake is that you have to do a lot of drilling. Before you start to mine, you have to drill your deposits so that the holes on average are only about 7 meters apart from each other. That level of drilling gives you the data to have a sufficiently accurate model that enables effective mining. Pure Gold did not do the final round of drilling. They went into production on a resource model where the drill holes were still 20 meters apart. And unfortunately, that just meant that they didn't know accurately enough where the gold was. And as a result, they were delivering to the mill rock that averaged 3.5 grams gold per ton when they had expected to deliver 9 grams gold per ton. So that resource struggle, combined with the decision to build the mine on a very small budget, which meant that they had not done a couple of projects, and the result was an inefficient operation, meant that they had low gold grade and high costs. And that was unfortunately a deathly combination for them, and the mine went bankrupt after only 14 months of commercial operations. I say here, it was a hated asset. I mean, when Pure Gold poured its first bar, that company had a market capitalization of, in speaking in Canadian dollars, 1.2 billion, and 14 months later, it was bankrupt. So that's the hated component of the story. Sad for sure. The opportunity is that we were looking for a foundational asset for our new growing Canadian gold mining company. And in Madsen, we were able to acquire that very strong deposit with incredible infrastructure, including a nicely built, very appropriate mill, tailings facility, and permits to operate. So there was an opportunity here to put this mine into production quickly. And so that deal closed 2 years ago. And we have spent the last 2 years doing the work that is needed to address the things that went wrong last time around and set ourselves up for success this time around. So certainly, from what I've said so far, you can expect that fundamental in that work is tightening the drill hole spacing. So we have done 90,000 meters of drilling from underground into the known deposit, the tons of that deposit that we plan to mine in the first about 2 years of mining. And those drill holes have tightened the drill hole spacing so that we have what we estimate as a sufficiently accurate and high resolution model of the deposit. We engineer our mining shapes on that, and then that's what we're ready to mine. And we tested the efficacy of that process through a bulk sample. Essentially, the first, call it 3 weeks of mining at full production rate, with independent auditors watching the model, the mining, the processing, and the numbers. And the goal of this bulk sample was to compare what our model said we would get out of the ground with what we actually got out of the ground. That, like I say, was the foundational error with the prior company. We did that work, and they matched, as you can see from these numbers, very, very closely. This is a set of results that we put out just a month ago. Most important piece of news that the company has put out since buying the Madsen Mine, because we've been talking about how our approach does address the problems of the past, but understandably, most investors wanted evidence. They wanted to see proof that our approach indeed addressed the problems. And this was our first opportunity to provide that evidence. So with this reconciliation work done, our geologic technical process was validated. The other big chunk of work that we have taken on over the last 2 years are the infrastructure projects that prior company decided not to do when they were building on a tight budget. And when you're operating a mine, you need to mine the right rocks, and then you need to do all of the mining and material movement as efficiently as possible. And if either of those don't work, then the mine is at risk. And so these are projects that we did for the second part of that requirement, right? So a 1.4 kilometer tunnel that connects the two sides of the mine, really important for an efficient operation. A camp on site, a tailings dam lift, a new primary crusher, new underground equipment. These are all things that we built, purchases, brought on site, commissioned, ramped up, so that we're ready to operate. Those who aren't familiar with mining may not have seen this before. This is called the Lassonde curve, after a famous man in mining called Pierre Lassonde, who cleverly captured in this illustration how the value of a mining project generally changes as it goes from discovery, way over here, excitement of creating new value, and then the grind of all of the work that's needed to take a project from sort of resource to ready to build. And that includes permitting. And that's a long, slow, expensive process. So the value usually declines. And then you get the opportunity to go from spending money to, ideally, of course, making money by being an operating miner. And that's the re-rate that generally happens as a project gets put into production. Now, I put this here now because the Madsen Mine under West Red Lake is a slightly different beast. The things along the timeline axis there are different for us. We didn't need to construct a mine, but we did need to implement some fixes and then demonstrate that those fixes worked. So our suggestion is that the bulk sample news really put us at the bottom of that second ascent. It was the opportunity for the market to start giving, it was the evidence that enabled the market to say, okay, Madsen is going to work. And now we are starting to get that re-rating as a producing company. So that leads to the question of, well, where does it take us? Where does the re-rate take us? What is the Madsen mine worth as the market believes in it for what it is as a new high-grade gold mine in Canada, and as we sort of explain the additional pieces of value that we are adding to this project as we go along. Okay, so I'm going to run through the considerations for that value question now. It starts with the official mine plan, and that's a pre-feasibility study that we put out in January. And that pre-feasibility study generated some good economics that certainly validated our decision to continue the work to restart the mine. So using a $2,600 gold price in the financial model, it shows in Canadian dollars, almost $500 million in net present value for the project and almost over $90 million in average annual free cash flow. So that makes sense. But, and there's a very important but here, the mine plan of that pre-feasibility study, the design for what you actually mine of the deposit, that work was done. Mine planning is a technical exercise. It depends on the shape of the deposit, but it's also an economic exercise. You only plan a mine on tons that you expect to be profitable. And so there's a gold price that's involved in that calculation. And the gold price that's used in a pre-feasibility study is always a trailing gold price. There are regulatorily constrained studies, and so it used a 3-year trailing gold price of just $1,680. That low gold price translates to a high cutoff grade, which is to say that only the most valuable rock, only the highest grade parts of the deposit made it into the mine plan. So that PFS is a pretty conservative look at how to mine the Madsen deposit. It's a mine plan that's really focused on fairly small, very high-grade stopes, but they're small and they require a lot of access development, tunneling between one small stope and the next small stope, and you have to use higher cost mining methods to mine those small shapes. I say mine design is an economic process. That's a process that we are, of course, doing at the mine site. We do our definition drilling, tighten up that drill hole spacing. Often when we do that, we find more high grade because when your holes are still 20 meters apart, there's lots of room to miss lenses of high grade within that. So often we find a little bit more high grade as we tighten up our drill hole spacing. And then we mine design using a more reasonable gold price. So we're using the long-term consensus gold price, which is $2,350. And what that does, lowers that cutoff grade so that you include some of the lower grade mineralization that's a halo, that surrounds the super high grade. And when you do that, you end up with bigger mining shapes. So this is the change, and this is a piece of news that we put out just last week. This is sort of our first attempt to help the market understand what the Madsen mine really is. It's not the small mine that our study outlined, and that still made sense economically 5 months ago. Instead, it's this. So the images on the left here, those are the shapes essentially in the pre-feasibility study, before that workflow, before the definition drilling and the new mine design at the higher gold price. And the shapes on the right are what happened after we did that workflow. In some cases, finding more high-grade gold, in every case using the higher gold price and therefore including more lower-grade mineralization, and you get bigger tons, bigger mining shapes. And that matters because over the life of mine, we expect to mine far more of the resource than is in the pre-feasibility study. The pre-feasibility study only captured about a third of our resource. We expect to actually mine a lot more than a third of our resource because of this change. Additionally, larger mining shapes you can mine with the lower cost mining method. That's called long hole stoping, and it's half the mining cost per ton of the mining method that you use when you're focused on those small stopes. That mining method, that selective one, is called mechanical cut and fill, MCF. And you can see the comparison in the mining cost per ton. Long hole stoping is a lower operating cost. So that's a very clear benefit. You don't also, in addition, you don't have to do as much access development. So those are essentially the tunnels to get from stope to stope. If instead of mining this stope, tunneling over, mining this little stope, tunneling over, mining this little stope, you just take the whole thing, then that means that you're mining more and doing less tunneling from stope to stope, which is another operating cost benefit. And it's just a more efficient mine overall. So those are really important considerations in terms of what the Madsen mine is worth as an operating entity. Now, I said that we often encounter more high-grade mineralization as we tighten the drill hole spacing. There's an area in South Austin, which is just one zone of our resource, where this has been happening a lot lately. So there's a lot of numbers on this slide, I realize. But in South Austin, when you look at the resource model where the holes are still 20 meters apart, there are some nice high-grade portions within this zone. But when we did the definition drilling, what we're seeing is like a 350 meter tall panel of pretty continuous high-grade mineralization. That's sort of Red Lake rocks returning the effort. It takes effort to mine in Red Lake. 7-meter space drill holes is a lot of drilling. But if you do the work and get into the right rocks, define the right rocks, then you have the opportunity to mine, at least in some places, really phenomenal mineralization. So that's an important thing that's happening. So I promise I'll try and wrap up in the next few minutes, but there's a few more boxes that I need to add when we're thinking about what the value of Madsen is as the market values it as a producing asset. So we start with the fact that, the conservative mine plan, which made sense. Then we add in the benefits of the fact that Madsen is shaping up as a larger and likely lower cost operation than that study outlined. Then there are 2 deposits that are defined in hand that we expect to add into the mine plan over the next few years. And so these aren't hopeful, these are sort of right there. One of them is Fork, which is truly right beside the mine. The lower image here shows the mine. The gray shapes are actually the historic mining. Fork is right here underneath the word potential. And it is a lower grade deposit that was therefore a little bit put aside. We've recognized that there's a high grade core, the purple blob, to that deposit. That's much higher grade, even than the average grade at Madsen. And it's only 250 meters from the nearest mine workings, and it's right up at surface, which is just lovely when you're looking to add a zone into the scheduling Think about how easy it is when you don't have to drive it up from depth in terms of scheduling and ventilation and trucking. Really nice additional, small, but perhaps about a year's worth of production in that zone that we will add to the mine plan. And then there's Rowan, which is our project just 30 kilometers away as the crow flies. It's 80 kilometers away as the truck drives because you have to go around the end of Red Lake, but there is a paved road that makes that journey. And 80 kilometers both is and isn't a long way. I suggest that it isn't a long way when the deposit that you are looking at has some incredibly good mineralization. So it's not a big deposit, it's 300,000 ounces, but 2/3 of that is that indicated level of confidence and averages almost 13 grams per ton. Remember, Madsen's average is 7.5. This is almost 13. So really nice mineralization and sort of designed for mining. Starts at surface, steeply plunging, relatively wide, nice consistent. It's like a really nice little area to mine. So we are working on a PEA that looks at the value of Madsen as a source of ore that's processed, or looking at Rowan as a source of ore that's processed at another operation. So expect to see some numbers around what Rowan, the value of Rowan, in the fairly near term. We're pretty excited to remind the market that Rowan is also a consideration for value when it comes to the Madsen mine. The last box on our ladder is the only arm wavy box because the other things are all very tangible and in hand. The last one, however, I still need to wave my arms a little. It's the North Shore target. So we have lots of drill targets, regional targets. North Shore is our highest priority. It is 1 kilometer away from Madsen along trend. We drilled it last year based on a geophysical target. It returned 150-meter intercept of rock that looked like Madsen. We were pretty excited. The rock did not carry much gold, but at the same time as that drill program, we were doing a soil sampling program that showed a Madsen soil fingerprint target just 200 meters to the west, where it turns out it's right on top of some geology, an interface of two rock types. That is the classic environment for high-grade gold in the Red Lake district. So we're very keen to get back to North Shore and see if those wide intercepts of Madsen-looking rock are indeed on the edge of another Madsen type system. So that's an exciting exploration target for us. So those are the considerations for what this project could or should be worth as we prove ourselves as a successful operating gold mine. This is the group that's doing it. Shane Williams has built mines all over the world for 25 years, and he very pointedly built a group of mine builders. That is our unusual skill set. I say unusual because in junior mining, there aren't a lot of teams who are designed for building mines. And we want to deploy that skill set again, which is to say that Madsen's our foundational asset. We are looking at what the next project can be. Is there another mine that we can buy where we can unlock value like we are doing at Madsen by using our access to capital and our skill set to give investors exposure to growing gold production. So that's again a bit of an arm wave, a vision statement, but that's the goal of the company, is to continue giving our investors exposure to increasing gold production. The last thing that I need to speak to certainly is how we've funded all of this and therefore what our share structure is. So we've put about $145 million Canadian into the Madsen project in the 2 years that we've owned it. We've funded that with about $130 million worth of financings. And we also took on a $35 million US credit facility starting at the beginning of this year. And so that credit facility is essentially what has funded us in 2025, through the first half of which essentially saw us operating an underground gold mine without yet producing any revenue. So that's what we needed that credit facility for. The result of all of that is we have about 343 million shares outstanding. We have 165 million warrants. The majority of those warrants trade, as you can see in the list at the bottom. And we have very strong trading volumes. We trade sort of 1 to 5 million shares a day. So yes, while we will need to trade through some warrant walls, so to speak, to get past some of those exercise prices, we do have the ability to do that, given our liquidity, and the expiry dates for those warrants have a good range. And I mean, should the re-rate continue. We're trading at about 90 cents Canadian today. There's 43 million warrants at $1. And so should we earn a bit more of the re-rate from the value ladder that we've discussed here today and get ourselves above $1, there is a possibility for some warrant money, a significant amount of warrant money to come in, which would enable us to unlock the value at Madsen faster and or acquire that next asset that we're looking to acquire. So that's where I will leave it. My name is Gwen. I would love to hear from anybody who has questions at any time, but also right here. And I'm sorry I didn't leave quite as much time for questions as I wanted to, but so it goes.
Compelling presentation. Thank you, Gwen. We've had a couple questions come in. Just coming back to your point about your financing needs, do you expect to raise additional capital in the near term, or is production expected to meet those costs?
We do not expect to raise additional capital in the near term. We expect that the rest of the Nabari credit facility, that credit facility, plus proceeds from the fact that we're now producing gold, is the capital that we need to ramp this mine up.
Excellent. You had a sort of interesting analysis of the impact of the assumption you make about gold pricing for how you mine the deposit. Of course, you know that gold prices are far above your most recent figure. Does that change your thinking about how to go about mining, or it just affects the value of the mine?
Yeah, so when we do mine design, we do mine design at that long-term consensus price, which yes, is well below. So that long-term consensus price is $2,350 per ounce. Obviously, gold is worth a lot more than that. But that's the way that you generally do mine design, is giving yourself, so to speak, a lot of opportunity to make profit. I mean, the mines are complicated beasts, and so you need to give yourself that buffer in case things go wrong. We've seen that, that's the common, that happens a lot in mining. But generally speaking, the idea that Madsen is so much more than what the really low-priced mine plan looked at, that's a really important story. You saw the differences in how big the mining shapes are when you're operating even at 2350 in your mine design. You get the opportunity to mine a lot of tons. And we always have said that the reason to bring Madsen back into production is to unlock the value that's right there, and then to look around and see what else you can find. And I mean, these red lake systems often are very rich and keep going. So that's at depth, that's in parallel structures, that's finding jewel boxes, so to speak, like what we're finding at South Austin right now. So getting down in there, seeing what you can find. And if and as you encounter those additional opportunities, I mean, in a gold price environment like this, there's just so much opportunity to unlock that in a variety of ways. So yes, the gold price is a fantastic wind in our sails.
Great. So you are producing gold, and congratulations on that. Have you made a forecast of what you expect to produce in 26 when you're fully ramped up?
So that at this point we aren't. So we the on the books answer for that is the pre-feasibility study, which is about 70,000 ounces of gold in 2026, and we are confident that we will meet that in 2026. The way that we get there will be slightly different. The grade will be slightly lower, and the tons will be slightly higher versus the PFS, given how the mine operates versus what that study outlined. But assuming 70,000 ounces of gold in 2026 is a very safe assumption. And once we get to commercial production, the goal for that is to ramp up through the second half of this year, get to commercial production near the end of the year, then be in commercial production ideally in 26, and that's when we would start issuing official guidance. So you could look for that hopefully right at the beginning of next year.
Okay. I appreciate why you have to be cautious, but at that guidance level, acknowledging from a long time ago, would that put you at positive EBITDA in 26?
Oh yeah, absolutely, for sure. I mean, we've started the mine up at a throughput rate that I just said we don't expect to have to raise additional capital to continue ramping this mine up. So there's a lot of, yes, absolutely. We would not have put this mine into production if if we didn't expect to have a significant free cash flow in 2026.
Okay, great. One other question here from the audience, and then it'll be time to close out. You're ramping up production, but is it too early to consider M&A?
Yeah, I get this question a lot because I do put that reference in about how we're already hunting for the next mine to buy. The analogy that I use is that there's never a good time in life to, I don't know, get married or have a baby or start a new job. You just have to do these things when the opportunity comes. And that I think applies very well to the situation that we're in. Absolutely, the vast majority of our focus needs to be and is on ramping Madsen up. Mines are very complicated machines, and every single piece of that machine requires attention. So that's where the vast majority of our focus is. But that doesn't mean that we can't have Jason, who's our corporate development, person out there looking for the next opportunity. And you also have to try on a lot of dresses before you find the right one. And so it takes time. And so we're out there hunting. And what's most important for us is finding the right asset where our team can unlock value with our skill set. And so we need to we're already looking for that because we don't know how long it will take. Maybe it will happen very soon. Maybe it won't happen for a year. But we want to be looking so that we can find. The other consideration, too, is given this gold market, it's not, I think it's reasonable to suggest that the kind of asset that we're looking to buy would cost a bunch more in a year than it costs right now. So we're motivated also from that angle to do it sooner. The goal of West Red Lake is to deliver production growth as quickly as is reasonably possible, in a responsible way. And so those are our motivations.
Well, terrific. Thank you again. Excellent presentation. And everyone who joined us, thank you for attending. We tried to get to all of the questions. I see I wasn't able to get to all of them. Please follow up with your question with your Sidoti representative, and we'll run down some answers for you. Thanks again, everyone.